Hi, Shell Point. My name is Jeff Corey from the Legacy Foundation. I'm joined today by Michelle Hoover. Michelle's a CPA here in town and is going to give us some great advice today about charitable rollovers from your IRA.
Yes.
So we've seen a lot of that lately, the last couple of years especially, Michelle. People have been doing this for years, but the laws were made permanent as far as the IRA charitable rollover. So I assume that's something that you talk to your clients about if they have any interest in giving.
Oh, yeah, quite a bit. It's a QCD, we call it. We always, we have all these acronyms. So it's a qualified charitable distribution. And it really helps, my clients, it helps taxpayers in not just one way, but actually in a couple different ways. For instance, if you're charitably inclined anyway, you can take a portion of either all of your required minimum distribution or a portion of it, and you donate directly from your IRA to the charitable organization. What this does is it decreases your adjusted gross income. Any part that you give directly from your IRA to the charity will not be taxable for federal income tax purposes.
Yep.
The other thing is, especially for Shell Point residents, if you decrease your adjusted gross income, that allows more medical deductions as well.
Great.
So it's a twofold there.
Great. So give us some of the specifics as far as there's a limit on how much you can do each year.
There's a limit. It's up to, you can do a QCD up to $100,000.
Okay.
It is this year.
And you can split that among any number of charities?
You can split that among multiple charities.
Yep.
You just talk to your financial advisor and they would be able to walk you through the process.
Okay. One of the important things you mentioned was that you can't receipt the money and then give it off to someone else. You want it to be a direct.
Right.
So you contact your financial advisor?
Yes, you have to contact your financial advisor. It's really very important because the IRS does audit this.
Okay.
Because they're getting reported, that you're taking the entire distribution.
Right.
So we have to prove that we gave the distribution directly to a charity.
Okay.
So.
And you just do that by the receipt from the charity?
And the receipt from the charity, and normally what I'll do is we'll keep that good old statement that you get, that monthly statement that you get that shows the distribution went out. And it will disclose on your statement that it went to a charity.
Okay. And so these are only valid from a traditional IRA?
Yes.
Correct?
Correct.
So if you have a 403B, a 401K, a Roth IRA wouldn't make sense?
Correct. No, it wouldn't make sense.
Okay.
Just from your traditional IRA.
Okay. And a husband and wife who have separate IRAs,
a husband and wife, if they've got separate IRAs, each can give up to their required minimum distribution out of the IRA and gift it to charity.
Okay. Well, that's great. That's something, again, year-end tax planning. Something probably you shouldn't start the last week of December. I mean, there may be some time delay there.
That wouldn't impact me, but your financial advisor would surely appreciate that.
Right.
It has to be done by December 31st.
Okay.
So it's, and there's, some of the other benefits, one of the other benefits is if you're looking at tax planning, sometimes this can make a difference in your tax bracket that you fall into. So you want to talk to give your CPA a call and have them run a tax projection.
Okay. Well, that's great. Appreciate you coming in today, Michelle. Michelle Hoover, again, CPA here in town, does a lot of work with our Shell Point residents. Thank you for that, Michelle. You always do a great job. And again, giving from your IRA, something that could be a special interest to you this year, giving to projects maybe here at Shell Point, your church, your school, your favorite area of philanthropy. Just another way to give and make the most of your dollars. Again, you don't pay income tax on making the gift. Sometimes people make a gift from their securities. This makes a lot more sense.
This makes a lot more sense, and one of the other things is I see where some people have they'll have the charities as the beneficiary of their IRAs.
That's a great.
If they don't need the cash, from their IRA, I'm sure the charity can use it now versus versus later. So.
Yeah, and even later, 100% of that would go to charity when you
exactly.
So great. So consider your IRA as you look at tax year planning here in 2019. And well, good day, Shell Point. Thank you.